Accounting equation and Excel. Monthly bills. Enter, sort, and pay. Get ready and some coffee because we're about to learn the accounting foundation, the accounting equation using Excel. Here we are in Excel. If you don't have access to this workbook, that's okay because we basically built this from a blank worksheet but started in a prior presentation. So if you want to build this entire worksheet from a blank sheet, you could begin back there or just construct your own worksheet as we go, or possibly just follow along with good old paper and pencil. If you do have access to this workbook though, 4 tabs down below. Example, month 1, practice, month 2, example. In essence, the answer key. Month 1, prior month of operations, the practice tab having pre-formatted cells, so you could practice the practice problem with less Excel formatting. Month 2 tab, the one we will be working in, current month of operations, where we started with a blank worksheet but are basically working within a template at this time. However, we will be adding to that template as needed as we go, practicing our Excel tools and formatting as we do so. Let's go to the example tab to get an idea of what we will be doing, noting that we're basically building our bookkeeping system based on the accounting equation, it acting as, in essence, our trial balance from which we will construct our major financial statement reports, balance sheet, income statement, statement of equity, sometimes that income statement being called the profit and loss report. So we're going to imagine we've got those typical month-end types of bills for our business now, like the telephone, the internet, the electric bill, and whatnot. But we did that last month. However, we imagined that we got the bill and then we paid the bill last time as they became due, possibly with the use of the bank feeds, which simplifies and automates the process. This time, we're going to do more of the accrual thing. As the bills come in, we will enter them into our system as what is typically called a bill form, meaning we increase accounts payable, doing an accrual account there, and then we'll pay at least possibly some of the bills so we can see the idea of sorting the bills. Now, quick note before we get into this, terminology-wise, bill can be used interchangeably depending on either side of the table of the transaction. Remembering every transaction has 2 people involved and they have an inverse relationship. So the terminology that we use often is going to be interchangeable in normal language, even in accounting. In other words, I could say I got a bill from my telephone company, and I could also say that I billed my client for work that we did, possibly guitar lessons in our case. However, we need to be more detailed when we think about the data input forms into the accounting system. So if I got a bill from the telephone company, whether it be an electronic bill or a paper bill, then I might not enter the bill into my accounting system as a bill form, because the bill form specifically means accounts payable will be going up, but rather I might simply pay off the bill as it becomes due with a check form, sometimes called an expense form if it's an electronic transfer, that will decrease the checking account. So that would be the easiest thing to do. So note that from a small business standpoint, usually your objective is to try to automate things as much as possible. And the weekly or monthly bills that become due are usually the easiest things to automate with the help and the use of the bank feeds, paying them automatically either with the checking account or with a credit card, similar kind of process. So that means when the bill becomes due, we might wait until it clears the bank, set up the automatic payments of the bill possibly, so it actually pays it automatically too. And then the bank tells our system that it has been paid with the bank feeds, and then we record that using a check form or an expense form, decreasing the checking account and recording the related expense like telephone expense, internet expense, utilities expense, and so on and so forth. Now, sometimes though, you might want to be dealing with accounts payable. Accounts payable is usually an account that's going to have businesses that are a little bit bigger oftentimes, because they have more incentive to try to be more specific about when they pay the bill. In other words, small businesses on the revenue side are might want to be on a cash basis because it's often easier, but are forced to be on accrual basis in certain circumstances depending on the industry, such as if we're a bookkeeper, a lawyer, a law firm, or a landscaper. We have to do the work and then bill the client, forcing us to record accounts receivable and try to collect on the receivable. That is going to force us to deviate from a cash-based system. On the expense side of things, however, usually we can be more in a cash-based system and automate the system with the help of the use of the bank feeds for bank transactions as well as basically credit card transactions. However, once the transactions start to be larger in dollar amount and number of transactions, it'll behoove us more and more. It'll be more beneficial for us to enter the bills as bills, increasing the accounts payable. Why? Because when someone sends you the telephone bill, for example, when the telephone company gives you the bill, it might not be due for 30 days from today. Does it make a difference if I just pay it when it becomes due? Or should I hold on to my money for 30 days? Well, if you're a small business and you have the cash flow, or possibly you pay with a credit card or something like that, and then you pay off the credit card when it becomes due, it probably doesn't matter that much that you pay it today or 30 days from today, even though there is some amount of inflation. Time value of money would typically dictate that the value of money is going to go down. And if you had the money sooner, maybe you have a cash flow issue and you could spend it somewhere else or something like that. But if it's a $100 bill and a 30-day difference, not really a big deal. However, if it was a $100,000 bill or $10,000s of dollar bills, then it becomes more significant to hold on to the money a little bit longer. And if you have more transactions, it becomes more significant. So that means that larger, mid-sized to larger companies are going to be more incentivized to track their accounts payable more closely, entering the information into their system, not just paying it when it becomes due, but tracking it in the accounts receivable, tracking the subledger, trying to pay it as late as possible so they can hold on to the money as long as possible, improving their cash flow situation and taking advantage of the time value of money without basically losing the money through inflation, right? If you pay, in other words, if you're in a period of inflation, if you had a high inflation, you can imagine, and you paid it 30 days from today, it was a $100 bill today, or you pay it 30 days from today. If there was inflation, of course, I'd rather pay it in 30 days when the $100 is worth less. It has less purchasing power, right? But hopefully you're in a stable spot where there's not too much deterioration of the dollar amount, but that's what incentivizes the accounts payable. So that's going to force us then to deviate from a nice, simple bank feeds situation and do more of an accrual process. Remembering the accrual thing always kind of messes up the automation that we would like to be able to do. Oftentimes, from a bookkeeping standpoint, that's the balancing act that we're always making. How can I automate the thing? When do I have to deviate from the automation in order to deal with some issue like increasing our cash flow situation? Where's the cost benefit analysis to do that? All right, let's go to the month 2 and enter our bills. So we're going to imagine end of the month, 2/28. We're going to sort through our bills that we got. We're going to enter a bill for the telephone on account. So note when I say it's on account, I mean that we're not going to pay it off. And this is book terminology. So if you're in an accounting class with a textbook, they're going to have to indicate that it's a bill. Usually that's going to mean the form that comes from the telephone company in this case, and then whether or not you're going to pay it with normally a check form, which might be an expense form, electronic transfer, or are you going to put it on account, which means you're going to put it into accounts payable and pay it at a later point in time. That's what the book terminology often means. So then we're going to say Verizon is the vendor. That's our telephone company. I'm going to indent that. Let's say $360 was the bill. Now, note from an accrual standpoint, we've already used the telephone, and now we're paying for the use that happened before that point in time. So it's appropriate then for us to expense it at the point in time we used the telephone even if we're not paying it quite yet, right? So this also is a little bit better or more accurate because it records the expense closer to the date that we actually consumed the service. You might imagine, why don't I just wait? I'll just hold on to the bills until the last day to pay them, and then I'll pay them. Well, you could do that, but that's a lot more disorganized, right? Because then you have to set up, you have to sort all of your paper bills or your emails in some way to try to pay them as late as possible. Whereas if you enter them as a bill in the system, you can sort them by due date within your accounting system typically, which is usually going to be more efficient, especially if you have a whole lot of bills that you're paying. All right, so we're going to go to the accounts payable. AP is going to go up on the liability side. We're not paying it yet. We're not using a check form. We're increasing the accounts payable. The other side we're going to put into telephone, remembering we have the option of making a separate telephone expense or possibly grouping it somewhere else like utilities or something. Most of the time, people are breaking out the telephone at this point, but just remember on the expense side of things, that's where you have the most leeway to say, how detailed do I want my expense accounts to be? How long does my income statement need to be? All right, let's put the zeros across the board, and then we'll deal with the subledger. Zeros across the board. Oh, not there. Control Z. Control Z. Calm down. You have an undo button. There's no need to panic. There's no need to panic. But you overwrote the thing. It's okay. We have an undo button. Okay, and then I'm going to go over here to my subledger. So now we have the subledger for accounts payable where I had Epiphone and Squire. I'm going to add a new one by selecting BK column and then right-click on it and insert. Insert. And then this one is going to be Verizon. All right, I have to see where the zeros ended over here. Right there, there's the column, 98. So I'm going to say this is going to be, wait, where did Verizon go? Oh, here it is. I'm on the wrong one. Dang it. Now I need to know what I clicked off. There it is right there. Okay. Let's do this again. Verizon column is going to be equal to, and then we're going to be picking up the 360 in our subledger. I'm going to copy down the balance. I'll scroll up to the top. So there's our prior balance that we dealt with right here. I'm going to double click on it. I need to extend this formula to pick up Verizon. So prior cell plus the current activity, enter, and then I'll just copy that down, pulling the fill handle down to the current operations. Boom. So now the accounts payables at the 3720, 360 is owed to Verizon. In accounting software note, I would further be able to sort this by basically possibly vendors that have open bills out there. And this would be entered with a bill form, giving us that added detail of a form rather than just a transaction, which I can then see the bill form as being paid or not paid within the detail of the Verizon of the subledger for accounts payable. So, and I can also sort it oftentimes by date, right? So you're going to get a little bit more detail, of course, in the three-dimensional software of a QuickBooks or Xero to sort this information. Here we have like more of the two-dimensional subledger, which at least allows us to break out what we owe to each of the vendors, but doesn't really give us a lot of room for the due date versus the date we entered it. And remember, those two things are important. When did I enter the bill? We might want to know that. But we also want to know, when is the bill due? So I can sort by due date and pay it as late as possible without getting penalized. The last day I can pay it without getting penalized, that's the game that we play on the AP side of things. All right, so let's put some underlines here. And we're going to put some underlines. Home tab font group underline. I will underline this and this. Underline, and then we'll bring down the balance. Bringing down the balance. This equals the sum of the prior balance and the current activity. Enter. We're going to copy that, Control C, and then hold down Shift, scrolling to the right, and we'll right click and paste it with just the formulas only. There we have it. And then I'll pull down the symbols so everything is nice and tidy, nice and neat. And then let's pull down the balance. We should have an increase in the liabilities and an increase in the equity. Or this should be a decrease to the equity. Let me fix that. It should be a negative. The accounting equation's helping us out here. You went the wrong way. You went the wrong way. That's why we have the double entry accounting system. Don't get all crazy. I did that on purpose to show you. That's why the red, now it should turn green. Okay. So now the liability went up and the equity went down on the same side of the accounting equation. That makes sense. Let's put an underline under here and move on to the next one. Otra vez. One bill down, like 5 more to go. Let's say this is going to be 228. We're going to enter a bill for the internet on account. And that was Spectrum is our internet company. We're going to say Spectrum is our internet company. I'm going to indent that. And the bill was for $8,180. So that's the bill that they gave us electronically or physically. We're going to enter it in our system with a bill form, which is not going to decrease the checking account, which would be a check form or an expense form, but will increase the AP, the accounts payable, AP going up by the 180. And then we're going to say the other side is going to go to the internet expense, which I don't think we have yet. We've got the interest expense, which I always mess up and put it in the wrong one right there. But no, internet expense. I'm going to put that one over here next to cost of goods sold. So I'm going to put my cursor in AL, column AL, right click and insert. Now I could put the internet expense with the phone bill, some people do, because you might be paying with the same company, or you could put it with utilities maybe, but it's becoming significant enough that I think a lot of people would break it out at this time. So I'm going to say internet expense. I'll just say EXP. Let's see what row I'm on because I messed that up. So I'm on this row. All right, so here's the internet expense. That's the row, 101 cell or 101 row equals that 180, but it needs to be negative. I learned last time. I have to remember that. All right, then I'll put zeros across the board. Zeros across the board. Oh, not there. Control Z. Zeros across the board. All right. The zeros across the board. And then in the subledger, I'm going to need another account again for Spectrum. So I'm going to put my cursor on column BM. Right click on it, insert, and this is going to be Spectrum. Spectrum. Let's see where my zeros ended last time. Right there. So that's where it needs to be. So this is going to be Spectrum's going to go up on the subledger by 180. Let's pull the balance down, which needs to be added now. So my added column, add the column, enter, pull down the balance. So my subledger's at 3009. That should match what's on my G to the L, GL. If I add these up, that adds up to 39. So that is good. And so let's put an underline under this and bring down the balances. Underline, and then I'll fix the underline situation in a second. I'll bring down the balances. Bring down the balances equals the sum of the prior balance and current activity. We're going to copy that, Control C, and then hold down Shift all the way to the right. And we will then right click and paste it just the formulas only. And then I'm going to just clean up my formulas for formatting's sake. Clean up the formulas for formatting's sake. What is this? A pigsty? Okay. All right, the next one is the electric bill, so we'll do this a little faster because I think we've got the routine down. Oh, what happened there? That's the wrong button. This is going to be enter bill for electricity on account. So that came from Edison, we're going to say. It's our electric company, 648. And let me copy, I should have copied my balances down here. Let's do that. Don't get ahead of yourself. Let's copy this down to here and then put our underlines so we're in balance. And now we're on the current activity. Okay. So now we're going to say Edison. Once again, we're not going to pay the bill that we got in normal parlance with a check form or expense form, but rather with a bill form, increasing the AP, the accounts payable, 648. The other side is going to go then to, now I have the electric bill. If electricity was quite significant, I might break it out in the utility bill, but if it's not, I might group it in there, which is fairly common still, with like the gas bill, the trash, or something like that, and so on and so forth. So I'll put it in the utilities, which is fairly customary. I'm going to make it negative because it's going to take equity down of the 648. And then let's put the zeros across the board, so we can follow where the zeros are at. So when we put it in the subledger, we can see what row we are in. And so there's that. All right, and then we're going to go into the subledger, and I'm going to add now another one. So I'm going to put my cursor in BN, column BN, or right click, column BN. How you BN? BN. I'm going to say insert. I'm going to say this is going to be Edison, and see where we were at. Where do the zeros end? Right there. So I want to see on the same row equals the same thing that happens to the AP, 648. The balance needs to be added, this last bit. So I'm going to copy this over, enter, and then pull that balance down. Subledger is currently at 4,548, which should match on what's on the GL, 39 plus 648, 4,548. Okay, let's put an underline on this thing for formatting's sake. Home tab, font group, underline, and then we'll bring down the balance, baby. What is that? Why do you have 100 zeros? Or equals. Bring down the balance, baby. Equals the sum of the prior balance plus the current activity. Control C, copy, right arrow, holding down shift to select the whole thing at the same time. And then I'm going to right click on the selected area, paste it with just the formulae, and then we'll do a little cleanup on our symbols, pulling down the symbol here and here to clean it up for formatting's sake. All right, let's do the next one. This one is going to be, all right, let's copy down the balances. I'm going to copy down these balances. And then we'll put an underline. Whoa. Right here. Okay, home tab, font group, underline. All right, so now we're going to imagine that we paid one of them. So we could see what happens when we pay it. Let's pay the phone bill. So on 228, we're also going to pay the phone bill. So we're going to say now, this is what oftentimes like a QuickBooks would call a bill payment form for the telephone on account. Okay, so this is going to be, we're paying Verizon. So now in book terminology, once again, if I say I'm paying for something, if I say like in a textbook trying to tell you the transaction, I would say, hey, look, we're paying the Verizon company on account. If I say that, that means that we're not paying them for the bill that we just got, but we're paying off the accounts payable that we entered in the past. So again, that's common. It's a tab that you're paying off, right? It's a common book terminology to try to get the information across. Obviously, if it was in practice, we would be sorting through our subledger over here and saying, okay, which of these I'm going to sort by due date, which of these do I have to pay because the bill is coming due and I need to pay it before I get penalized or piss off the vendor for paying it too late, or possibly I get a cash discount if I pay it a little bit earlier, right? So those are the things we take into consideration. And so now we're going to say we're going to pay off the telephone. Now, notice it's a bill payment form. You might say, hey, look, I'm decreasing the cash account. So wouldn't that just be a check or an expense form? Those are the forms used to pay something, decreasing the checking account. Yes, that's correct. But a lot of software like a QuickBooks will actually make some of the expense forms or check forms, the forms used to decrease the checking account, a little bit more specific so that the forms themselves really tell you exactly what is happening. So a software like a QuickBooks will call the form that we used a bill payment check or something like that, which still indicates that it is a check form because checks are the form that decrease the cash account, or you might call them an expense form, same kind of concept. But if it's a bill check form, that means the other side we already know just by the form that is used is going to decrease the accounts payable. It's not going to record the expense. The other side is not going to be the expense. That means if I'm an auditor and I'm drilling down on the expense form, then I won't know from the bill payment form what expense account was hit. I have to go to the related bill form that was entered because that's where we actually hit the expense account, in this case, telephone expense. Obviously, we could guess because it was Verizon that it went to telephone expense, but we don't actually record the expense here. We decrease the accounts payable. All right, so we're going to pay off the 360, we're going to imagine. And so that means that cash is now going down by 360. Now, by the way, how do bank fees fit into this? You might say, well, now when you actually pay it off, you're going to have to usually manually, I mean, if you're doing the full accrual system, you can't really wait till it clears the bank and then use the bank feeds in order to record it because you had to wait until the last day in order to pay it. So you've already most likely tracked your accounts payable in the subledger and are physically going to do the transaction for the wire transfer. So you're probably going to record it on your end and then use the bank feeds, the electronic transfers, to verify the transaction, which is the normal bookkeeping process for a bank reconciliation kind of check figure. All right, in any case, the other side's going to go to accounts payable. Accounts payable is also going to go down. So we'll say it's a negative. And so now we're going to say zeros across the board. And then we'll adjust the subledger. Zeros across the board. Nothing is happening to the income statement. Why? Because we hit the income statement when we entered the bill, not when we pay the check, which is just decreasing the accounts payable, which is a liability, not an expense at this point. So on the Verizon side here, I can see the bill. This would be a bill form if we had more detail in terms of a QuickBooks system, which we can then pay. So we're going to pay the bill form. This then is going to connect to the bill form, which we can see here in the subledger. The two should net out for us no longer owing them any money to Verizon. But in the software, you'll also see that the bill form will say paid, right? It'll have been paid. And the payment will be connected with an added level of connectivity and audit trail that you can do in what I would call like a three-dimensional database program, as opposed to like this two-dimensional Excel worksheet. So this is going to be equal to the same thing that happened in the AP over here, 360. And then we'll bring down the balances. I don't need to do anything fancy to it because I didn't add a column, bringing down the balance. And so now the current balance is at 4188. The total in Verizon is down to zero because those two net out. 4188 should also match what's in the general ledger, which is going to be this 4005 minus the 360, which will be the 4188. Let's bring down our balances over here to see if we're still in balance with regards to the accounting equation. It looks like we are. So assets went down because cash went down, liabilities went down because accounts payable went down. Nothing happened to equity because we expensed it when we entered the bill, not the pay bill form. So now we're going to say the balance. Let's bring down the balance. Oh, let me put an underline under it for formatting's sake. Put an underline under this thing. Getting sloppy. Otherwise, it gets ugly after a while. Home tab, font group, underline. Okay, now you can bring down the balance, baby. Equals the sum of this plus this. We'll copy that, Control C, right arrow holding down Shift, scrolling on to the right. We will paste it formulas only. Boom. Let's do one more bill payment, paying off the Spectrum bill, just to get a feel for it now that we got the rhythm down. So we're going to say we have a bill payment for the internet, and this was Spectrum. So now we sorted through our payments that we have to pay, and we're going to pay off Spectrum now. So now we're going to say that one was for 180. So now we're going to write a check, but in the system it'll be a special check, which is a bill payment form, which tells us not only the checking account's going down, but the other side is going to the AP accounts payable. So it's going to be a negative 180 to the cash. Let's bring down the balance up here before I go forward. Don't get ahead of yourself. We're almost done. I can see the finish line. Yeah, but you're going to trip if you go too fast. You focus what's in front of your face. Here we go. I'm going to say this is equal to the 180. Accounts payable is going down. We'll put zeros across the board. Zeros across the board. Zeros across the board. Nothing's happening to the income statement because we did that when we entered the bill, not the pay bill, because now we're just decreasing the liability. And then over here in the Spectrum column, we see the bill up top, which is now going to connect to the pay bill form, which is like a check form. It's a type of check form or expense form, if you want to call it that. The forms that decrease the checking account. That brings the Spectrum activity down to 0. We don't owe them nothing. We don't owe you nothing now. And let's pull down the balance. Pulling down the balance. Ba-boom. And so now the balance in the subledger is at 4008. Let's see if that ties out from the subledger to the general ledger. Bringing it on back to the GL. And we'll select here to here. We're at 4008. So that looks like it should be the case. And let's put zeros underline here, underline, boom, and then home tab, font group, underline, bringing down the balance. Let's first bring down the activity. I'll bring it down to where the balance will be, right there. We'll put an underline here, and then we'll bring down the balance, baby. We're going to say this is going to be equal to the sum of the prior plus the current. Enter. We're going to copy that. Control C, right arrow, holding down Shift all the way to the right. I'm going faster because we're running long on time. You're pulling too much time, man. Breaking your own rules. I'm going to paste it formulas only. Okay. And then now we're still in balance. Boom, boom, boom. MUI B to the N. I got two letters for you. B to the N. I'm going to pull down this for formatting's sake. And then we'll do that over here for formatting's sake. And so now let's just check on our income statement now. We've entered our expenses. And so the expenses are totaled up over here whether they were entered with a bill or we paid the bill, because we entered all of the bills is when we entered the expense, whether we paid them or not. And then if I select all of these, it's going to give us our net income, which is currently at 5008. And I could select those and the prior balance up here, which gives us the net income for the 2 months thus far, 12,436, which I'm watching right down here. All right, so that's going to be it. Is everything else looking good? I should probably do a spell check. Haven't done that for a while. Check the spelling on this thing. The depreciation, that's okay. Don't change that one. Balances, no, that's cool. Ignore those. Customer, no, that needs to be fixed. That needs to be fixed. Equip, requip. I don't even know what I was trying to do with that one. Where, rent, equip. Equipment. Let's see, change it. Finance, change it. Okay, looks good.